The insurance is going to follow the owner of the vehicle so that when you're providing proof of insurance to the state of Connecticut, basically if the vehicle's registered in your name, then you want the policy to read in your name. So very easily, if a vehicle's paid off, you can transfer it to your child's name if it's really their car, but it's just paperwork. And at that time, they would look to acquire insurance in their own name.
Are you ready for a successful retirement? We're addressing the topics facing today's retirees. Welcome to Retire with Ryan. Now here's your host, Ryan Morrissey.
Welcome back, everyone. Continuing my discussion with Matt Dzubin with Roland Dumont Insurance on things to consider with your P&C insurance in retirement. And last week we were talking about homeowners insurance, and this week we're moving on to talk about car insurance as well as some other things, other types of insurance you might want to think about when it comes to covering your property. So Matt, tell us a little bit about car insurance. What type of coverage should the typical retiree have?
Good question. I don't know that there's one sweeping answer for everyone, but in general, what we try to encourage and what we're looking for, especially here in Connecticut, is adequate protection to make sure that if you have a bad claim, that you don't have a cloud hovering over you, worried that you could potentially lose your house or that all of those assets that you've worked so hard for over the course of years are now going to be in jeopardy because you made a mistake on the road. So with auto insurance, it is a little bit counterintuitive at times in that you want to make sure that you have really good protection to start with. And by that, I mean specifically liability protection and uninsured motorist coverage.
So you want to have car insurance, definitely.
You need to have car insurance.
Yeah, it's illegal, right, in Connecticut.
So unfortunately, one of the conversations I have a lot is that you need to have car insurance, and people know that. And, most people have car insurance and coming into the process of a conversation with me. Typically, though, what we see is that especially through like direct writers where the policy may have been set up in a call center 5 or 10 years ago, where your life was in one place and now you may be a homeowner or other changes have occurred and you're coming from a place where, yeah, sure, to save on money, maybe you had minimal coverage, but in the event of a loss, the minimal coverage in Connecticut is $25,000 per person for bodily injuries that you may be liable for. So if you get into a bad accident and you rear end somebody, that's why they call them accidents, because that happens all the time. $25,000 for bodily injuries just doesn't go too far. And if you own a home, then your personal assets, certainly your home, could be on the line. And it's very avoidable to enhance your auto liability coverages to a level where you don't have to worry as much about those types of scenarios. Not only that, but the insurance companies in the Connecticut market especially have recognized the fact that if you come in with better coverage limits, if you're going to go online right now and get a quote, if you have better coverages going into that quoting process, then you're going to get a better price point with a lot of these companies. So not only do better limits better protect you and give you peace of mind in the event of a loss, but they can also help on your pricing. That's the counterintuitive piece that most people don't understand. Basically, if you look at it this way, a lot of these companies are rewarding responsible limits. They see that just like they see some of the other rating criteria as someone that cares about their insurance, and therefore they're willing to give better rates as a result.
Okay. What about like some little things I've experienced over the years, like you have a crack, that develops in your windshield, or if you get in an accident and you need a rental car or you need to be towed, like are they riders add these things on? I don't know what they're called.
Yeah. So I would refer to them more as features to these policies. So additional features, and those are very basic add-ons. And again, it's one of those things where if you have not reviewed your insurance in a while, or even if you have, those are the little things that seem to be missed. And those are probably going to be the most prevalent types of losses that you're going to experience. Here in Connecticut in the wintertime, as you know, it's very easy to have a rock kick up from snowplow or anything like that. And now you need a new windshield. Well, I mean, it's very cost effective to have full glass coverage on most auto insurance policies. And most carriers offer full glass coverage with zero deductible, which means that literally you lose your windshield, you make a phone call, and they can come out and replace the glass in the parking lot of your work. You can bring it into the shop. There's a variety of options, but it's a very simple coverage to address. And you only really realize that you don't have it when you run into a scenario where it happens. And all of a sudden, you've got to pay $300 or $400 for a new windshield out of pocket when it could have cost you basically the cost of full glass coverage per year is nominal.
That's like $5 or $10 a year, right?
Yeah, it's not expensive. With most providers, it's not.
It's pretty cheap. It's worth it. So I would say everybody should make sure they have that. Want to make sure, too, that you have coverage for a rental car if you get in an accident, and also not just like a really low amount. Because if you're driving like a nice car, right, you don't want to be driving like a compact car, because you would then have to pay, if you only have $20 a day, I've run into this too, $25 a day, then you got to pay the difference to get the rental car until you get your other car back.
That's correct. Yeah. So one, you want to make sure that you have rental reimbursement coverage. The standard amount with most companies, what you're going to see is, like you said, like a $20 a day line item or a $30 a day, $900 per occurrence max. And it's very, very simple and easy with most of these companies to enhance upon that coverage. And to your point, you can see what rental car rates are. And over the past year, rental car rates have gone up. So if you're driving a minivan, like my wife drives a minivan, we have 3 children. I mean, it's going to be difficult for us to fit our family into something that's smaller, certainly in a comfortable way. So yeah, to your point, in our case, we'd probably want to be looking more like $50 a day for reimbursement, if not more. And what that does, company to company, that pricing may look a little bit different. So as an independent agent, what I'm looking to do is find the best overall value for a complete package for somebody. So if rental reimbursement is a priority, which it should be for most folks, unless you have like an additional vehicle, like an extra vehicle at your disposal. But if you need your vehicle to commute, then certainly what you want to do is look at all of these components and make sure that they're adequate to properly meet your needs. And your agent or company should be able to give you that advice and have that and be able to give you pricing very easily on that.
What about if you still have children that you're supporting, adult children maybe that are still living with you? Is it best to have them on your coverage, or is it best to have them on their own policy?
So that's an interesting question. I don't know that there's any one final answer on any of that. Every situation's a little bit different. A lot of that pertains to who actually owns the vehicle. If your adult child is living in your home, but they do not have ownership of any of the vehicles, and every situation's a little bit different. Generally, I'll try to give you something a little concrete here. Generally, what we see is that at the age of 25, there's a break from a rating perspective with a lot of these insurance companies. So where it may have been in the best interest for the child to be listed on that policy, generally at the age of 25, if there was going to be a transition from a cost perspective, at the age of 25, generally that's where we see a lot of transition from. We were on our parents' policy, and now we no longer are. And a lot of that is just what's going around your life. Have you moved out? And if so, is it out of state? Or, there's lots of different questions to be answered there. But 25 is a magic number for insurance rating.
Okay. You mentioned who owns the car. Does that matter in that situation? If you own it or your child?
Yeah, the insurance is going to follow the owner of the vehicle, so that when you're providing proof of insurance to the state of Connecticut, basically if the vehicle's registered in your name, then you want the policy to read in your name. So very easily, if a vehicle's paid off, you can transfer it to your child's name if it's really their car, but it's just paperwork. And at that time, they would look to acquire insurance in their own name.
So there could be some savings at that point.
There could be savings. And again, there's lots of different ways. I've had sometimes it works the opposite way. Sometimes you're adding mom or dad to your policy. You own the vehicle, but maybe mom or dad now stays with you. So there's lots of different scenarios that could potentially play out. Most of these companies are going to want full, if you're driving a vehicle and you have regular access to the vehicle and you live in the household, then most of these insurance companies are going to want you listed as a driver. And then from a liability standpoint, what happens is that you're then liable for any drivers that are on your policy. So if you're the owner of the policy and the owner of the vehicle, and your child gets into an accident or your parent gets into an accident, whatever the case may be, you're the one that's liable. So to shift some of that liability is probably the main objective, not only with, we talk about cost savings, but also with, all right, now I'm no longer legally liable for something my son does. That puts me in a different position than I was yesterday because I had more risk because he was driving under my policy where he could have just established his own. So,
yeah, that is something to think about because you're lowering your risk. I mean, I don't know what the statistics are. If like younger people have more accidents than older people, I might be stereotyping here, but.
Yeah, no, it's like a curve. So the insurance rates are kind of, like I said, the law of large numbers. Yes, younger, more inexperienced operators over the course of time. I'm not an actuary, but no surprise, younger folks get into more accidents. And as a result, the insurance rates, you talk to anyone that's got a 16 or 17-year-old driver that they've added to a policy, the insurance rates are crazy when that happens. So, but also your need for insurance has increased that much more because now you're liable for everything that they do. So when we have discussions about umbrella insurance, increases of liability insurance on the auto and or the home, but certainly the auto in those scenarios. Yeah, that's why, because the rates go up, but your risk goes up as well. So it's important to have those discussions. Understand that even though your cost is going up, there's a reason for that and you need better protection as a result.
Yeah, for sure. Yeah, we'll get to umbrella policy in a couple of questions here, but I know with COVID maybe lessening, people are looking to travel again. Let's say you doing some traveling. Is there additional insurance you should have if you're going to travel, like from a property and casualty standpoint?
So there are various, if you're going to travel and you're taking a long trip, you do want to make sure that you have some type of coverage in the event of a breakdown. The last thing you want to do is be on the side of I-95 with no real resource to get yourself off of the side of I-95. So there's auto clubs, AAA. There is towing and labor coverage with most of these insurance providers. Again, those sorts of features to some of these policies, these companies have, at times, they have really good additional limits of coverage for those types of scenarios. So it's definitely a conversation that you want to have because from a cost effectiveness standpoint, those costs for those types of coverages are really, really low. And again, you drive through New York City and you break down, that is a tough place to be. But from a liability standpoint, from a core coverage standpoint, you want to be properly set up here in Connecticut or wherever your primary residence is. And that coverage will follow you wherever you go in the country. So that's not an issue. But again, you just want to make sure you're properly set up.
Yeah. So if you're a snowbird, I guess, right, your primary residence becomes Florida instead of Connecticut, but you're still come back to Connecticut 3 or 4 months a year. You don't have to worry that you lose your coverage when you leave the state of Florida. It stays with you, right? That's
a really good question and a really good point. So a lot of our clients live in multiple states. They have a second residence here or there. So what's really important is that you're tying in your protection from point A to point B. Whether you're a primary resident in Connecticut or primary resident in Florida, there's also some tax implications and those sorts of things. So people sometimes get creative with putting on registration, canceling registration when they come up north, putting registration back on when they go back south. But that's secondary to the liability concern. What you're looking for is consistency. And in Florida, unfortunately, a lot of property and casualty insurance providers have gotten out of the Florida market because of hurricanes, and especially on the property side, the hurricane risk is just so high that they're not too keen on writing these second homes. So you may have two separate companies, one for Connecticut, a different one for Florida, but that does not mean that you cannot tie in coverage to make sure that you have the adequate amount of coverage sitting over both properties, especially from a liability perspective. So if you have $1 million worth of coverage on your home here in Connecticut, there's lots of different ways that can be extended down to Florida.
Okay. What if you're, on your travels, you rent a car? Are you still covered or should you take the rent? I was always told by people that worked for the car rental companies don't ever take the rental insurance because you're covered, but I don't know if that's true or not.
Yeah, well, that's interesting because I usually hear the exact opposite of that when they're trying to sell the rental insurance. The textbook insurance answer to that is it depends, but has been more of a focus, especially lately, with the way in which a personal auto policy protects in the event of a rental loss. Okay, so what I mean by that is that there's not only just your coverage and how does that extend to the rental, because typically if you have full coverage on your existing auto insurance policy, and let's say you have $500 deductibles, when you go to rent a car, then that coverage would extend to the same level on the rental car. All right. So now when you're renting the 2022 Toyota Camry through Enterprise Rent-A Car, that your full coverage extends to that vehicle. What a lot of people don't know, and what is really tricky these days, is that if you get into an accident, then your insurance may pay to repair or rebuild that car, even replace that car if it's a total loss. But the rental car company is actually out of money. All right. There's what's called loss of use on their end, because now that car that they could have rented out is in the shop or it's been totaled, and they're not receiving the income that they would have been for the last 2 or 3 weeks because the car is being fixed. So if you don't have the appropriate levels of coverage, or if you haven't had that discussion with your insurance agent and even your credit card company, then you may be set up to be at a loss for that loss of use. And that may be money that they're going to come after you for. So these are all things that when you're signing off on a rental car, there's caveats, and they try to hit you here, there, and everywhere. And then they're selling you the Sun Pass and, the Easy Pass and prepaying your gas. And if you're like me, then you're trying to just reject. Well, on loss of use, it's definitely a real thing. It's something that you have to watch out for. And it's an easy call to your auto insurance provider to see if you have the coverage.
Okay. That makes sense. Yeah. You mentioned credit card company. I mean, I actually rented a car once and was leaving the rental lot, and the gate came down on the car and malfunctioned, and it caused damage to the car. And it was like $1,000 of damage, but my credit card company covered it, which I didn't even know about. Someone told me, hey, call your credit card company. They ended up paying for all of it, and I didn't have to make a claim to my insurance company.
Yeah, so that's definitely a good point. Not that I represent a credit card company or anything like that, but from the insurance point, that's something you're already paying for. It's a feature within a program that you've elected to, for whatever card and whatever other value you're getting out of that card. It's an additional feature. So I would take a look at that. It's a really good point. Some of these credit card companies, when booked with that credit card, all right, so that's the other caveat. It's not always just automatic.
And it's not in your debit card either. So something to consider.
Yeah.
It probably, I don't know if it is, but I don't believe it is.
I don't know either, but it's an additional layer of protection. And I know if you put a call into Chase or any other bank for that matter and just say, or you look at what your actual features are, that is one of the features. When you rent a car, is there loss of use built into it? So it's just a nice, easy additional feature that can actually, I'm glad to hear that you had a real life example of that, because most people don't know that.
Yeah, I would have just paid it. I had no idea until someone told me to check it out. Yeah.
Yeah, because the other thing is that if that had happened with your regular insurance, you would have been subject to a deductible.
And a possible rate increase in the future, right?
And a possible rate increase and all of that. Exactly.
Well, this has been some great information, Matt. I think we're going to stop here for this week. And remember to tune in next week as we dive into our final interview with Matt, where we talk about how to save some money on your car insurance, on your homeowner's insurance and umbrella insurance, talk more about umbrella insurance, and how you can make sure that you're protecting your assets as best as possible. For those of you who aren't subscribed to this podcast, please subscribe to it by going to Spotify and searching Retire with Ryan and clicking subscribe. Or if you're an iPhone user, going on Apple Podcast and searching Retire with Ryan and subscribe. Hope that you have a great week, and I look forward to talking to you next Wednesday. Take care.
You should consult a financial advisor familiar with your specific circumstances before you make any financial decisions. Nothing in this broadcast constitutes a solicitation for the sale or purchase of any securities. Any mention of rates of return are historical or hypothetical in nature and are not a guarantee of future returns. Ryan Morrissey, CFP, is an investment advisor representative of Morrissey Wealth Management, LLC, a registered investment advisor.